In this video, I, Bobby the Market Watcher, will analyze in depth the top 10 stocks of the Bill and Melinda Gates Foundation, as I'll go through Bill Gates' latest farmland investments. Stay for sure until the end to see the number one stock of Bill, as in the latest quarter it saw an increase of more than 4,000%. As always set with educational purposes and is not meant to be taken as financial advice. For a long time, a myth was brewing in the investment sphere that Bill Gates is the single largest landowner in the United States. The reality is that Bill Gates controls massive amounts of land, but as Reuters stated in an article from mid-2022, this is a myth. Bill is not the largest landowner, as he owns 0.027% of the total arable farmland in the US. A 2021 report published by the US Department of Agriculture said there were 895 million acres of farmland in the United States. From these close to 900 million acres, Bill Gates controls 242,000, which equates to the 0.027% figure. According to a January 2021 article by the Land Report, Gates owned 242,000 acres of farmland through two investment management firms, Cottonwood AG Management and Cascade Investment. As data from Statista shows, just like conventional real estate prices from 2020 onwards, the price of farmland has skyrocketed, going from $3,000 per acre to $3,800. This means that Bill Gates has $920 million worth of farmland in his personal possession. Now that we know this, let's start with the 10th biggest stock position in his portfolio. Waste Connections Incorporated provides non-hazardous waste collection, transfer, disposal, and resource recovery services in the US and Canada. It currently is 0.85% of the portfolio, but it is important to note that it is a very recent buy for Bill Gates. He opened a position in the company for the first time in Q3 of 2022. It has a dividend of 0.79% and its long-term debt-to-equity ratio is 0.89, which is below 1 and it is okay. The PE multiple is 41, which for me is just too high. The 9th top stock of Bill Gates is Coca-Cola FEMSA, ticker KOF. Coca-Cola FEMSA, SAB, a franchise bottler, produces, markets, sells, and distributes Coca-Cola trademark beverages. The long-term debt-to-equity ratio for COF stock is 1.24. Above 1 is generally considered too high, as per the beliefs of the great Warren Buffett and his methodologies. The price-to-earnings multiple of the company is 16, which for me is okay. It is for sure not too high. COF stock is a 1.07% share of the total portfolio. COF is also a dividend-paying stock with a massive 4.01% yield. The 8th stock in the portfolio is the famous Walmart, which makes up 1.15% of the total portfolio. The debt management of the company is very strong, with a debt-to-equity ratio of 0.48. The most optimal level is below 0.5. The PE ratio, although for me is too high at the moment, standing in at 44. Walmart is another dividend-paying company with a yield of 1.56%. The 7th largest allocation is in Ecolab, which actually saw an 11% increase in the position sizing in Q3. So, in the eyes of Gates, the company is a good buy. Currently, Ecolab accounts for a 2.07% portfolio share. For me though, the current price we pay for each dollar of earnings is too high at 37. The debt management of the company is 1.13, which again is above 1, indicating to me the long-term debt is higher than the total equity. The sixth biggest position is Caterpillar, which stands at 3.55%. The current PE is 19, which is not over the top, but for sure it can go lower as the company has a historical trend of a 7 to 9 earnings multiple. The long-term debt is 63% higher than the total equity, with a DE ratio of 1.63. Caterpillar is paying a 2% dividend. On spot number 5 is sitting Deere Co., which in Q3 saw a massive 355% increase in the position size, now equating to a 3.85% share of the total portfolio. The earnings multiple is 17 and the company is paying out a 1.16% dividend. The debt-to-equity ratio is 1.66. On spot number 4 is Waste Management with a massive 16.61% share. It saw a 89% increase in Q3 as now 5.7 billion is invested in the company, while in Q2 the investment totaled only around 2.7 billion. The earnings multiple is 29, while the dividend is 1.67. The debt management is not good with a DE ratio of 1.97. On spot 3, sitting on the official podium is Canadian National Railways, which saw an increase of 440% in Q3. And it now represents a 17.42% share. It has a debt-to-equity ratio of 0.69, it has a multiple to its earnings of 23, and a dividend of 1.87%. The second best stock according to Bill Gates is Berkshire Hathaway, the company of his longtime friend and mentor Warren Buffett. Actually, Bill reduced this position by 14% in Q3, but still it represents a massive 23.32% share. The number one stock in Gates' portfolio saw an increase of more than 4,000% in the position sizing, and it may be strange to some people, but the actual stock is Microsoft. Yes, Bill Gates is the founder of the company, but actually currently he is not the largest shareholder, and before this position increased, it was a really small position in the total portfolio. Microsoft is a legendary company, but it is very odd to me to see such a position increase, as for me personally the stock is just too overvalued with a PE of 24. The debt is really good, the company pays a dividend of 1.23%, but it is just too expensive for me to believe I can achieve my desired return of minimum 12% per year. As a general conclusion, Bill is betting big on the biggest and most proven companies. Most of all of them pay dividends and they're extremely established, but for most of them the price is just too high for me, and also the debt management of these companies is by far not ideal, with most of them having a long-term debt-to-equity ratio of above 1. Subscribe to the channel and like the video if you want to watch more high-value educational analysis videos. Goodbye for now and until next time.